So, I believe you are experiencing the exact same condition in which every other trader is experiencing. And if I'm not mistaken, for the past 2 months approximately, your trade has been going against you. Or maybe your win rate has dropped drastically. Maybe before 2 months, you used to have a 90% win rate, but now it seems like you have about a 30% win rate. The reason is because there is a shift in the tide. And what I mean by a shift in the tide is that there's a different trend coming up, in which, as you all know, the Trump markets. For the past 4 years, Joe Biden has been the president of the United States of America, and the Biden markets are something in which we have been used to. Now, the Biden markets have constructed the Forex market in a specific way that every trader is used to. And this last 4 years has created a whole lot of traders, especially from the pandemic, because I remember vividly, Trump literally left seats when the pandemic just started, and then Biden entered after the pandemic. So after the pandemic, the Biden market began, and the pandemic was when a lot of traders jumped into the Forex market. So we are automatically used to the Biden markets. But then again, the Trump market has come. And let me make this clear. The Trump market is not a negative thing, okay? The Trump market is just reconstructing the tide. And also, let me also make this clear. Nothing has changed in the Trump market. The market just became more liquid and more volatile. And I'm going to show you what I mean. So this is the best strategy in which you can use to win every trade of yours from the Trump market. Now, like I said, nothing has changed. You just have to be more careful because the markets have become more liquid and more volatile. Let's jump straight into the market. So ladies and gentlemen, we're going to start with USD JPY. So this is USD JPY. Let me delete everything from USD JPY. I've marked this out previously, but let me delete this. Now, if you're trading the Forex markets, like I said, we need to be more careful this time around. We need to analyze with utmost care. Now, first things first, we want to do is we want to understand the overall direction or the overall direction of the market. Now, the overall direction is like the trend of the wave, the trend of the atmosphere, the trend in which things blow. For example, when you see birds of the sky, they all fly in a specific trend. And if you want to fly, you're not going to trade against their trend, or you're not going to fly against their trend. Whenever a person is a plane and he usually has turbulence, turbulence occurs when the wind has started blowing against the direction of the plane. So when the plane is going against the direction of the wind, it starts shaking and some things will take place. But then again, that's not what we're here for. Now, if we look at USD JPY, with your common knowledge, you clearly know that USD JPY is on an uptrend. But the problem is, at some point, it started consolidating, this is a point of consolidation. So the markets in USD JPY has been consolidating for this long, but don't worry, that is not really our problem. Now, some pairs have been affected by the Trump market. Any pair that obviously has USD in it has been affected by the Trump market because the Trump market is the dollar. And yes, you could say, okay, there are some pairs that does not have the dollar. For example, the AUD USD or AUD USD actually has the dollar. For example, the NZD CHF, and we're going to get to those pairs, or the GBP card. Yeah, they don't have the dollar, but still the card is still influenced by the dollar. Every currency is influenced by the dollar. So if I would suggest, if you're not good, avoid any USD pair for now until you understand the Trump market. So this is USD JPY. Now, we need to, just to take the trade, let this be clear. We need to have at least two time frames in sync that are heading towards the exact same direction. For example, the weekly and the daily, maybe if it's bearish, they're both bearish. Or maybe the weekly and the 4 hour, or the daily and the 4 hours are both bearish. We should focus on the weekly, daily, and 4 hours. And listen, you cannot understand the Trump market if you're trading a 15 minutes time frame or a 5 minutes time frame. You're not going to, it's like you're seeing this much when you can see this much. So that is what you need to understand. So it's why for example, you're saying I'm starting with the weekly time frame. We have to start with the weekly time frame. So we have to get at least 2 time frames in sync. Now, what is the weekly time frame doing? Is the weekly time frame on an uptrend or on a downtrend? The truth is that the weekly time frame is still on an uptrend. Yes, some people could say it's on a downtrend, but it's actually on an uptrend. where you could say it is on a downtrend, overall downtrend. It's on a mini downtrend, but overall it's still on an uptrend. Where you could say it has changed or it has had an overall shift of structure if it breaks beneath this level. But now we can see, where was the recent low before the most recent high? It was here, right? This was it, and it has broken beneath this level. So in this case, in this range, it is on a downtrend. But in the overall market, it is still on an uptrend. In the overall market, it is still on an uptrend. You understand? So most likely this could be on a 4 hours time frame, but we're going to come to that for now. So we have to add this. So for the weekly, the weekly is what? Bullish. So the weekly is bullish. That's what we have for the weekly. So we'll have to delete this, and then let us come down to the daily. Now in the daily, what have we seen from the daily? Is the daily bullish or bearish? From this angle, the daily is still bullish, to be honest. But then again, remember this shift of structure here. A shift of structure has taken place because, listen, let us do this together. This is a high, there's a low, a higher low, higher high, higher low, higher high, higher low, higher high. Now this is an equal low with this previous low, right? But then again, it started, this high was not able to break above this high. So this is a lower high, this is a lower low, but now this is a higher. Do you understand? This is a higher high, and then this is a what? Lower. So you see, it is shifting. It is not that straight. And then this is a lower high, lower low, lower high, and then lower low. So I would say the daily, I would say the daily is bearish. Yeah, I'm going to say, as for me, the daily is bearish, looks bearish. That's for me. Then the 4 hours, we're going to come to that later. So the daily is bearish, and I mean, if we zoom in, because there is a shift of structure from this. Listen, let me explain why I talked about the shift of structure. From this market, where is the most recent high? The most recent high would be here, right? This is the most recent high. Now, before this most recent high, where is the previous most recent high? Here's the previous most recent high. And then where's the previous most recent low? Here's the previous most recent low, right? So let's change this to red. And then where is the previous, before this low, where's the previous most recent low? Here. So these are the four we're working with. The latest most recent high, the latest most recent low, the previous most recent high, and the previous most recent low. Now realize that the previous most recent low has been broken. Do you understand? So as the previous most recent low has been broken and it has retested, that automatically is a shift of structure. Okay? Automatically that is a shift of structure. Now look at the most recent low right now. It has even been broken again, but it has not retested. So most likely the market would want to retest this most recent low and still shift again to the downside, most likely. But then again, we're going to come to that later to understand. But for now, let us delete all this, and we have concluded that the daily time frame is on a bearish move, right? So now let us go to the 4 hours. Now from the 4 hours, if the daily is on the bearish, clearly the 4 hours is also on the bearish. We can see there are no two ways about it. Starting from here, this it was going up. It had high. Okay, let me explain. It had highs and lows. High, higher low, Then he worked his way up, in which you can see it was making little higher lows, in which these are not significant higher lows. But he worked his way up to this place before he retested, worked his way up again here, and then he made a major retest. So this is a major liquidity sweep that swept below this sweep. Now, let me make this clear. These other places are higher lows. We can see there are some higher lows here. But these higher lows are not significant higher lows. You can see these are more like insignificant. So the sellers were not powerful enough to push it in a significant way. So he now had to grab some liquidity that at this point in time, he pushed it here. And you see, he wanted to make a retest, but he pushed it way below to grab some liquidity. So now this is the major liquidity zone. Then he pushed it again to the upside. Do you understand? And now if you extend this, and also if you extend the major liquidity zone, we're going to add a line here. If you extend the major liquidity zone, you see that the major liquidity zone has been broken already. So the market is on a downtrend. So we can see that it started making, after it made the shift of structure, after breaking the liquidity zone, you can see these are not serious retracements, but you can see it made a retracement, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and a lower low, and it keeps on going down and down and down. So the 4 hours is basically what? The 4 hours is bearish. So now we can see the weekly bullish, the daily bearish, and the 4 hours bearish. We can decide to go lower than that, but let's stop here for now. Then now let's go back to the weekly. Now, if we go back to the weekly, what I want us to do in the weekly, remember, this is the Trump market, so we have to be careful. We have to analyze things carefully. Now, when we go back to the weekly, remember, this is where the market is, and this is the most recent high. So this, first things first, let us target this zone. Let's target this zone backward. This zone is where our focus is, and we see that the market has made some retracements in this zone multiple times. So let us mark out key levels in this zone. First things first, what are the key levels in this zone? Let's look at this. We're going to mark it out quite little. This, okay, I think this one is better. Yes, I think it's better like this because we have a week. Now, this week, most times it doesn't really count, because if you change this to a line graph, you see it doesn't touch it. But the reason week is important is because week is just like a trail, like a footstep, where it tells you where the market is. For example, if a person has a wet feet and he's walking into his kitchen, and when he gets to his kitchen, you see him standing, and then there's a picture taken of him. Where he's standing, he started from the door, but he's not at the door. He's inside the kitchen. So the wick is like a trail that tells you he was once at the door. So we can see there's a wick here. But still, let's count it. So 1, 2, 3. This is not really perfect. So 4. We have about 5. Okay, actually 5. 5 touches. And then let us find, is there any other place? I think this is another one. I think this is another one. This is another one. So this one is not that much. We have 1, we have 2, and we have 3 touches here. And then we have the last but not the least, which is here. So here we have about 3. We have 1 here, 2, 3, and 4. We have 4. I think another one, 5, basically. So, okay, and then we also have another one, which is somewhere here. So yes, I know I said let us start from the middle, but I exceeded it, yes, deliberately. So these are like the key levels in which the market has been respecting. So these are the key levels we're going to use to predict the targeted point. And that is another thing you need to notice now. we've talked about having two time frames in sync, right? We've talked about overall direction of the market, having two time frames in sync. Another thing we should talk about is targets, which is the key levels in which I've marked out. So these are the possible targets of the markets, right? Now remember, this is a weekly time frame. Let us go down to the daily, just in case we can find any key level, any better key level. Now there's some minor key levels in the daily, but these ones are mainly constructed by wicks. From here, this is one of them, and this is another one. So these ones are basically constructed by wicks. Like I said, there's a touch here, there's another touch here, there's another touch here, and another one here. So these ones are minor key levels in the daily time frame. So the market is going for a sell, right? So if we come down to the 4 hours, where are the possible entries in which we can find for this time frame? Because we're looking for sells, right? We're looking for sells. So we're looking for places where we're going to enter the trade, because this is a Trump market, and a Trump market is going to deceive you for sure. But then again, this is another key level. It's not really the best key level, but this is a key level in which, so what we're looking for right now, the market is in a place of indecision, okay? What we're looking for is, we're looking for sells. So we're looking for the market to break beneath here, retest, and then we take it to the downside. Or maybe come above to have some liquidity grab to this place, or maybe even to this place to push it to the downside. Now, if this were to be a previous market, I would have taken this trade now to the downside. Maybe I would have come to the 15 minutes time frame. You can see from the 15 minutes, I would have taken this trade. I would have taken the short position to the downside. Yes. I would have just done this simply right now. But the reason I'm not going to do it is because it's a Trump market, so it is different now. So we don't really know about the Trump market. But then we've seen a whole lot of consolidation in which the market has been consolidating. It has broken below before. Previously, it has come to retest it. Previously, it has broken, and we can see this is how the market has been looking. So this is perfectly how the market has been looking. We're not looking for buys, we're looking for sells on USD JPY. If I would want to take this trade, I would be looking for example, a head and shoulder pattern. Something like this, in which seems like it is about to form, but it is not clear. It's not forming clearly. So the USD JPY, I'm going to be looking for sales, but it is in a place of indecision. So maybe we may wait for this trade to decide, okay, this is not a perfect time to take the USD JPY trade. Let us go for another pair and check. A pair that does not have the USD. All right, so this is AUD-CHF. Now from AUD-CHF, it has no business with USD. There are a whole lot of other pairs in which I'm going to do some analysis for you also. AUD-CHF has no business with USD. So for AUD-CHF, if we go to the weekly time frame, it's on a downtrend. I'm not going to waste your time. The weekly time frame is bearish. The daily is bearish. The 4 hours is consolidating, but still, we can still say the 4 hours is bearish. So if I'm not really liking this pair, because it doesn't look like something that has real direction. Now the 1 hour is bullish. We can see it's making some higher highs and higher lows. But remember, we're going to be looking for sells, okay? So now let us mark out areas in this 1 hour time frame. This 1 hour time frame, like from previously, from what I've taught you, we have this, where again, I think this is another very good key level. Yeah, I think this is another one. So what I'm going to be expecting, if I'm going to take this trade, is I'm going to be expecting a break underneath for this A. Now you see the difference. You see how fast this was, because one, I'm a good trader. Yes, that's one. Then two, It is not a USD pair, so sometimes analysis could be faster for pairs that are not USD. So we can see, you can also use a trend line, in which I do not always use trend lines. In a trend line, it is making higher highs and higher lows, but at some point it seems like it has started its consolidation. So when it breaks below this consolidation and retests this key level, then we can now take it to the downside for AUD-CHF. This is for AUD-CHF for the Trump market. So we can keep it above here and take it all the way down. This is like a 1:2, or we can decide to pull it down here, which is like a 1:3, however we feel like. Then another pair in which I kind of like is the Euro GBP. Now you see the effect of the Trump market. Now I was on this trade on the Euro GBP, and my analysis was for buys. But then again, we can see it went towards my direction. I deleted that, but I believe you saw it, right? I had this right here. Yes. This was what I had, and it went towards my direction, but before it hits the take profit, it went down. So that is one thing about the Trump market. It is really volatile right now. So the Trump market is making some moves in which it's really confusing us. But from what we've seen, this is on a downtrend. But remember, we're not going to start judging from the 1 hour time frame. We have to go to the weekly. Now, the reason I went on a buy is because we have broken above this major support level, but although it did not retest. So we can see the weekly is on a downtrend, although this is like a shift of structure. Although this shift of structure is not fully established, it's just a break above, right? So we can still say the weekly is on a downtrend unless it just had this break above. The daily is also, the daily is on an uptrend, right? The daily is on an uptrend. The 4 hours, now this is where we can have this confusion. But then again, I would go for a sell, not because I lost my last trade, but because if we delete all this right now, this looks like a head and shoulder. Looks like a clear head and shoulder pattern. So this is the neckline, this is the head, then this is the right shoulder, and to push to the downside, right? So if there are points I would want to mark out right now, let's go to a lower time frame, the 1 hour. Now we can see places in which we're going to mark out correctly. It's not that much, but we can mark out here. And also here. And then also the last one we can mark out is here. So if I were to take this trade, I will just wait, because at this point in time it's consolidating, right? It's consolidating. So I'll just wait for the trade to break beneath, retest, and then we take it to the downside. So this is for the Trump market, ladies and gentlemen. And for this Trump market, nothing too much, but we just have to be optimistic. So for the Euro GBP, we're expecting some sells from Euro GBP. If it breaks to this point, I'll take it all the way here for Euro GBP. The next one in which I anticipated or I analyzed was GBP card, right? Okay, I did a GBP card analysis for a different video. I'm analyzing the AUD-CHF, in which I'm expecting also sells. Then also a USD pair, which is USD-JPY. I'm expecting sales too from USD-JPY. So ladies and gentlemen, I'm going to be updating you as time goes on, okay? Have a lovely day. Bye for now. So this is a trade I entered. Turn off the lights here so you can see it clearly. So this was a trade I entered. This is USD-JPY, and actually I got stopped out. Now if you look at this, the market was on a downtrend. It broke below. I was waiting for a break and retest, in which I got, but then again it still came back to this place. It still came back to this entry point and wicked me out before pushing down to the downside, or pushing down towards my direction. and I think the market has started going towards my direction, in which I could be re-entering the trade, but I'm not sure. That's for USD JPY. But then the trade I entered is the USD card pair. Now for the USD card, if we take a look at it, for the USD card pair, we can say that the trade is going towards that direction, or although it has not completely hit our take profit, we still have a long way to go, in which it may take time, but I believe at some point it's going to hit, and when it hits, I wish I can update you. If I can, I'm going to update you. If I cannot, I'm not going to update you, but we're going to see how it's going to be. And the market is so volatile, I don't know what's happening. The Trump market is something else, so confusing that a whole lot of us may not really be able to understand. So in summary, in terms of the Trump market, everyone should be careful and everyone should be very, very patient with the markets, because nothing has changed. The only thing is that the market is more volatile now than it used to be. Okay, so ladies and gentlemen, thank you for watching this very amazing video. Bye for now. Subscribe.